Welcome to another episode of the Real Estate Playbook. This week's guest on episode number 66 is Marshall Smith. Marshall, how you doing today?
I'm good. Happy to be here.
Awesome, man. Happy to have you. So Marshall comes with us with owning the branch of Fairway Tampa. So Marsh, when did you exactly open that branch?
It's hard to know the exact date. So I think it was about June of 18 is when I started with Fairway, and our office was originally in Brandon. We inherited the branch a little bit and took over and kind of changed a lot of things, and then moved it over to Tampa, and that's where we're at now.
Awesome, man. So let's go back in time a little bit here. So obviously in the mortgage business, you've been with Fairway a little over 4 years. Tell me about when you got started in the mortgage business.
Sure. Yeah. So long time ago, right? So 2001, I started in the industry. Different time, paper apps and faxing and a lot of different things.
Call on the phone book.
Yeah. Nobody had really laptops, or we had a few computers in the office, not a ton. So started about 2001 and did a lot of face-to-face appointments and met with clients who were looking to purchase or refinance. Refinances were big. And so right out of college, started right here in Tampa, the International Plaza area, and with a company there.
Awesome.
So, it's been a long journey.
Awesome, man. Yeah, 21 years. So I'm sure you've seen a lot. What are some of what I guess would be your best times in the market? Was it the past couple of years, or was it more in that 05, 06 boom?
They're different. I think everything changed in 2008 after the Big Short happened and the financial meltdown. So, I would say the most enjoyable years have been the last few years. Much more regulated, much more upfront to protect the consumer.
Absolutely.
A lot of changes that were put in place, to benefit the consumer that were needed to be made, and makes it to where, I'd say in the early 2000s, I didn't really necessarily like telling people that I was, a finance guy, that I worked with mortgages, because it had a bad
rap.
Absolutely. I mean, definitely a bad reputation. Because what was happening with subprime mortgages and negative amortization loans, and so feel like those issues have been corrected, and things are, I don't mind telling people now.
So. I'm a little bit more proud of the industry. Yeah, I do remember back then, everybody kind of coached to, charge as many points as you can, the yield spread.
Sure.
And then they, I remember those pay option arms where they're kind of selling, hey, 1% payment, but we're really, talking about the product. So that obviously tarnished, everybody who was in mortgage back then, loan officers.
Sure. Yeah.
So talk to us a little bit about, so before mortgages, I know you got in almost right after college. Is there anything you did after graduating, or did you jump straight into mortgages?
Yeah, straight into it. Did an internship, and then a couple small things, and then started right away. Learning curve was large, because I started on the phones and just learning how to find out people that were interested, and there's a lot of pieces to this though, and unfortunately, it's not everything you can learn in training. Just have to dive in and have experience in real lifetime. So, really the best way for us to learn was just working on files and helping clients out and doing the transactions. A lot of refinances back then, because rates were a lot higher, and refinancing was a new thing that came to the market. So less purchase business with the company I was with, but a lot of refinances.
Yeah, and a couple things too. You touched on that. We always kind of promote with our brokerage is one, learn through experience. I always feel like, hey, there's only so much you're going to learn in the classroom. You really got to get your feet wet, go out there, and just kind of fail forward. And the other thing is kind of learn from a practitioner, not a theorist. Like, kind of find somebody to mentor you, or that you could follow, or find a group of guys that you're doing it together, and that's going to help speed up the learning curve, rather than somebody who might have read a book and has a bunch of theories, but really doesn't know what it takes to make it.
No doubt. Yeah, there's no substitution for actually doing it. Yeah, and as long as I've been in the industry, I'm not exaggerating. Like, I see new things every month, which is crazy. Like, I'm like, how could I have never seen this happen?
Yeah. Absolutely.
This week, dealing with a client, who was trying to waive escrows on a VA loan, right? For whatever reason, it's been a while since I've been asked that, and it's at 100%. There's certain servicers that do and certain that don't. So that was something that I was surprised I haven't came across. Like I do a ton of VA loans, like every month I do. And for whatever reason, not a lot of VA clients have asked to waive.
Were you able to waive?
In this situation, no, because the servicer is servicer specific, and he was doing a bond loan, and the bond is through Lakeview, and they don't allow it. So it's different. It's not straight across the board. It's a gray area. So, but anyway, my point is, as long as I've been doing this, like there's still new stuff that pops up, and I'm like, I had no clue, how to handle that situation. So we have good resources to find those answers, but industry changes so much, and on your end, on our end, and there's new things every day, and so it's an ever changing and an ever growing and learning experience going through this.
Absolutely. I mean, I just learned something new. I thought for VA and FHA it was mandatory, but it can be servicer specific. So
absolutely,
VA,
yeah, and I thought too. But no, that's not the case. Everybody knows on conventional, if you put 20% or more, you can waive, right? Mm-hmm. That's pretty straightforward. But with VA, certain servicers will allow it. From what we're finding, most do not, though.
Yeah.
Most do not allow it.
And I ran into on the real estate side, now this didn't have to do with the mortgage servicing, but I remember working with a couple clients, and this would have been 15 or 16. They were conventional 15-year mortgage, but I remember their reasoning for waiving escrows. Dave Ramsey, I think, was kind of teaching a lot of people, hey, don't have escrows because the bank's kind of using your money, whatever it might be, pay it yourself. And then also when he was kind of going on his pitch about doing the 15-year mortgage instead of the 30. So I don't know. Had anything to do with that kind of advice? Because I have seen that in the past.
Yeah, could have. I think that's always the mindset. They don't want the bank to manage their money. Some people, it's easier. Be honest, we're not talking about a ton of money. There's always a cushion there in case the taxes or insurance go up, and a lot of clients don't like that. Mm-hmm. But that money is required to be sent back. So you get a refund check typically every year if there's a surplus in there. So I escrow all my taxes and insurance. I'd rather have it handled that way.
Absolutely.
Budgets for me, and which I don't have an issue with, but it just keeps it to where it's all in one payment.
Taken care of. You don't have to worry about anything.
Yeah. So that's the way I do it. I don't waive on any of the loans that I have, and whether it's an investment or a primary.
And plus, what I don't think they talk about, and I don't know if it's still the case, but I recall when I did mortgages years ago, there's usually like a quarter basis point hit.
It is, yeah, absolutely. So it's an escrow waiver fee that you pay at closing, so they can monitor your account and make sure. And to be honest, I don't want to pay a quarter. No. I mean, it's $250 for every 100,000, so it could be significant.
Yeah.
A $400,000 loan, all of a sudden you're paying $1,000. Yeah. So, I'd rather not pay that.
Absolutely, man. I couldn't agree more. Now, one of the things, Marsh, I know me working with you in the past, and obviously working together now. One of the things that I've always admired is how strong your work ethic is. Not only staying abreast of the market, your education, but just grinding, working around the clock. Now, a lot of times I'll ask, like, you kind of jumped in mortgages right after college, but what were some of the previous endeavors or jobs you might have had that maybe gave you a leg up? But where I'm going with this is I always try to see, hey, how can people get into production quicker than others? Is there a certain skill set, certain attributes they had that allowed them to have greater success when they kind of got into a real estate or mortgage venture?
That's a great question. When I meet with people, one of the things that I point out is what are your expectations, right? Mm-hmm. Because our business is a business to where it's all scalable. You can grow there's really no ceiling. Like you can grow as long as you want, as high as you want. And so for me, I think a couple of things that helped me, which it took me some time to figure out, but I was always good on the phone. I was always great at carrying a conversation, and I like dealing with people. I liked helping people too. And that's something our business allows for. I can say, you can't be shy, and you have to really master your trade and really be knowledgeable about what you're talking about, because clients are going to see if you're unsure.
Absolutely.
and a lot of it is just diving in both feet and rolling your sleeves up and straight work ethic. So you work around the clock. There's always clients, there's no limit. Like we could go all night. Like at some point we turn it off to have a balance, life balance. And but if we didn't, there's always an opportunity to do more in our business, and there's always things that need to be done. So, for me, I had a real estate background in construction. A little bit. My family were contractors.
So you knew a little of the lingo. I
did, and I knew, I knew real estate pricing pretty well, which helped. I also, when the market changed a little bit, I worked in default services, real estate, mortgage related, and which is all construction and renovation and things like that. So I've always had a good base in houses in general, which helps me, explain things and helps people understand products better. But at the end of the day, we're dealing with people and we're dealing with clients and effective communication, and communicating expectations and to me, those are the most important things of our industry. I mean, even if I didn't know one thing about construction, I still could do my job, as long as I, was able to effectively communicate and set expectations for everybody involved, title, realtors, clients.
Taking control.
Absolutely.
Yeah, I agree. Me and my wife both had hospitality experience and just kind of learning that customer service, talking.
Customer service.
The problem solving, troubleshooting, customer's always right. That just kind of having that subconsciously embedded in my mindset kind of helped me transition to mortgages and then later real estate. So
no doubt.
I definitely think those are great attributes. Now, a lot of times we're going to talk about the good, right? We'll get, you always see people get interview success and it's always like glitz and glamour and glory. But a lot of times, there's some growing pains that go with that, especially when you're starting out. One question I always like to ask our guests is, what's one thing that you didn't expect or one thing maybe you took for granted when you first got into mortgages?
Well, that's a good question. So I think the toughest part when I first started, just confidence, right? I want to say take it for granted because I really at the time I was pretty humbled. I kind of already had a blue collar background and worked, in my family construction business. So this stuff was pretty easy, but so I didn't take it for granted, but I didn't have enough confidence, right? So if I'm dealing with clients, I hadn't had enough experience. And so, there was some hesitation on my part. Clients can see that, and customers can see that. They can say, hey, this is the guy representing me. And I'm not sure that he knows exactly what he's talking about, right? And I was early 20s, right? So, you're dealing with people's largest asset, their largest purchase transaction they're doing in their entire life. Like, it's a lot. Right?
Absolutely.
So now I don't take that lightly. And at the time, just confidence, and that's what I needed, at that age. And it just took me continuous reputation, just repetitive, conversations and to continue to do it over and over until I did, and shadowing some other people. I think that was huge for me. There was some other more experienced loan officers that I was able to, go on trips with and sit down and watch how they present, and that helped me a ton. Learning from others.
The objection handling, all that good stuff.
Yeah, and mostly just educating. Never really had a hard time with overcoming objections because in most cases it makes sense. And what we're doing makes sense. We get a product, and real estate's a great investment. I mean, it's something that people need to do. So really didn't have much of an issue overcoming the objections, but just making sure that they, the client felt comfortable and confident as me representing them.
Yeah, absolutely. And then, I'm glad you touched on that, because one of the biggest things that we see with agents coming in nowadays, like back when I started mortgages, I even think back real estate, even as recent as before COVID, is like one thing is like just work ethic and discipline. It seems like everything now is cloud-based, so getting people to come to the office. I think when you kind of work as a community or a group and you're kind of grinding together, rowing together as a team, you kind of have success get over some of that apprehension. But confidence is one of the biggest ones. Like people don't have confidence in themselves, or they're lack the knowledge that makes them lack the confidence. And we kind of always advise, hey, you're going to gain the confidence of the repetition. Like continue to make those micro commitments to yourself. Do what you're supposed to do every day. You're going to keep learning, keep improving, and by keeping those micro commitments, you kind of gain confidence, and you're going to start to improve your skill set and feel more confident in the field. Are there any things or any secrets you had on building the confidence? I think confidence and then a discipline and a work ethic are the two main attributes that I would label that somebody probably is going to have the most success in real estate or mortgage if you're lacking.
Yeah.
So how did you help build your confidence?
Yeah. That's a great question. And for me, it's like, let's not reinvent the wheel. Right. So look at the people who are successful. Look at what they're doing, what their daily disciplines are.
So follow the model.
Follow the model, right? Follow the script. It's a numbers game, right? This is a numbers game. Contact 100 people. You're going to get 30 of them to answer the phone. Out of those 30, you're going to get 10 of them that are going to take application. Out of those 10, you're going to pre-approve 6. Out of those 6, we're going to go to contract with 5, right? Things like that. Work the numbers. This is a numbers game. So, if I have more phone calls to, prospective clients, I'm going to have more contact ratio. And if I look at the people in my office who do the best, have the best reviews, they have the highest approval rating, they have the highest closing percentage, they have the highest, closing volume, what are they doing, right? Most cases, they're working harder. There's no shortcut for that. Like they're just putting more time in.
Discipline to a schedule.
Absolutely. Daily disciplines, right? And so at the end of the day, not just our industry, that's all industries, but if I'm somebody new in this industry, I'm going to find the best guy and I'm going to sit on his hip, and I'm going to see what he does and what his best practices are. Another thing that I think is huge is obviously we've seen a shift in this market, right?
Absolutely.
This is so, to me, it's so like obvious, but it's easy for us to continue, even you and I and people in our office, it doesn't matter. It's easier for us to continue to do what we've done the last 2 years.
Yeah.
It's not the same market, right? We're going to get different results than we've got the last 2 years, right? Last couple of years, it was so busy. We were order takers. There's so much business going on. Rates were so low. The purchase market was so hot. It's not like that now. So if we keep doing what we were doing the last 2 years, we're not getting the same results, right? What adjustments are we going to make, right? If we expect those just to change on their own, may happen. We may get lucky one month, and we may, but we have to make the change, right?
Absolutely.
So what are we going to do different? Are we going to be able to look at ourselves and see what we need to change? Maybe we need to, make twice as many calls. Maybe we need to, while we're slow, maybe we need to beef up our social media presence. Maybe we need to improve on our drips. Maybe we need to improve on our previous client communication. Like these are all the things that we got to maximize because these are our pillars of business. And if we expect it just to change and do the things the way we did before, we're not going to get the same results. So
no, I completely agree.
Yeah. So to me, you're realtors, finance guys, like, if I just sit back and wait for something to happen, it's not going to happen.
No,
we got to make it happen. So to me, that's the biggest thing that I'm trying to, preach to our team. Our outreach, we got to go ahead and build our infrastructure up right now because we're not as busy as we were.
Right.
Right. So, to answer your question, I don't know if I directly responded to your question, but those are the things that we're trying to focus on right now.
Yeah, absolutely. And I think I couldn't agree more with you. When you're talking about those things, I always say, there's a difference between a hunter and a gatherer. And last couple of years, our phones are ringing off the hook. We're just gathering as much as you can. But now it's a completely different mindset shift. It's a completely different skill set to get out there and really aggressively go find the business. Now, the good side about this and what I'm optimistic about is this is where market share's picked up.
Yeah.
Especially with so many people complacent, kind of on the sidelines. I think if you go get it, especially if somebody's starting off right now, this is the time you pick up market share even more and quicker than in a bad market or in a good market, but you got to put in more work.
Absolutely. Yeah. Market share is important. Reputation is important.
Absolutely.
Because that follows you, right? So your reviews and how you represent a client, that follows you. So it's important to do as much as you can and to work on your trade, when you're slow. And when we're busy, like we were order takers, literally just answering the phone, writing down
just trying
orders,
to keep up.
Just doing everything we could, 12 hours a day, whatever, just to, keep up with the volume, right? Well, that's not happening right now. So what are we going to do to make ourselves better? And what are we going to do to try to add market share right now? And, to separate ourselves from our competition. And, and these are areas that we can do it, right?
Yeah, absolutely.
So 100% with you. Our focal point with our branch, a lot of companies will go multi-state. That's not us. Like it's this 6-county region, that we're focused on.
Yeah.
And adding market share in that region and separating ourselves. 'Cause a lot of people are leaving the industry. It's just not, the industry is overstaffed right now.
Right.
Real estate industry. Less transactions. You can't go from, 60% of the transactions that there were, and then still keep 100% of the staff.
Right.
It's just, some people are going to get pushed out and head to other industries, and that's just the normal cycle of real estate and any industry.
Yeah,
and that's where we're at right now.
Yeah.
So, what are you going to do different to be one of those 60% and add market share? So when the next, little rush happens, you can take advantage.
Yeah, because the best time to catch it is if you're at the bottom, but you're not going to catch that wave up unless you're kind of grounded.
Yeah, it's tougher. Absolutely.
100%. So I want to kind of talk a little bit about mortgages for real estate agents who are maybe a little newer to the process, even buyers out there who are maybe first-time home buyers going through the process now. We're an immediate gratification society. Amazon, everybody wants to click a button, get it right away. Now we even have mortgage lenders. It's like buyers can go get their own pre-qual letter. Why don't you tell the audience a little bit about these pre-qualification letters they can present to themselves or can print themselves, or the difference between that and like a pre-approval or even a pre-underwritten approval from a mortgage lender, and what does your process look like? Yeah. And explain what the difference is so they're aware when they're trying to win in this market.
Yeah, so the definitions vary, right? So they're all across the board. Typically for us, we get a client pre-approved. They're pre-approved, and what we're doing is we're gathering their income and asset documentation. Not fully underwriting, but this is a pre-approval. We run it through a desktop underwriter. It gives us an approval. We tell them what their purchasing limit is. Now that can vary based on the taxes and insurance on each property, or homeowner association dues or whatever. So we verify the short list of documents, not fully underwritten, and then we say, hey, based on what we've seen, this is their ceiling, and let's go to work. And they may want to opt to purchase something less because they don't like the payment, or whatever the case is, but this is their limit. And and then once they go from there, that's what the sellers want to see. Well, we also have an opportunity to fully underwrite, right? So which is called a TBD approval, or just a fully underwritten loan approval. And so they actually go through underwriting, and they can have all conditions cleared and pending appraisal and homeowners insurance and title.
That's it.
And if that's a client's case, listen, I have one right now that went to contract, and it was a 9-day closing timeline.
Wow.
Right. So for us, and that 9 days is mostly to get the appraisal. Sometimes we get if they put enough money down, we're getting appraisal waivers too. But in this situation, we didn't get a waiver, so we had to get the appraisal rushed. It got back in 3 days and wait on title, and we'll be clear to close. Right, 9 days.
That's awesome.
So there is added value to that because it's a better offer.
Yeah. Well, it sounds like it's almost something that can compete with cash, right? Because
it is cash, but you're waiving the finance contingency.
Yeah.
When you have that, we're fully underwritten. We put our name on it. You're waiving it. So if it's a better offer, we're offering $5,000 more. You still have your inspection period for the client just to make sure. But once the inspection period is done, then their deposit goes hard, and we're ready to close in 9 days. So yeah, sometimes quicker, it's better terms, shorter timeline than cash sometimes. Maybe they have a shorter due diligence period, so of course it can compete with cash. Absolutely.
And why would, just for the realtors out there, especially the newer ones that are starting to pair up with a lender, maybe don't have a relationship yet, newly licensed, get in production, don't quite understand. What would be the difference between, not even the pre-underwritten, but between you or one of your guys pre-approving a buyer and then them sending their buyer to a lender's portal to get their own pre-qual letter?
Yeah, so if the problem is all companies don't handle pre-approvals, pre-qualifications the same.
Mm-hmm.
I have one that I'm dealing with now, and they clearly state on there, this is based on what the client stated. They haven't verified anything, but they issued a pre-approval. I mean, there's not really much value in that. Like, how are you going to get your offer accepted if you're just saying, well, they're pre-approved based on what they said?
Yeah.
But that's it. So a lot of companies will do that, but I think when you have a local company who has a great reputation and they can close on time, and you're not dealing with, banks sometimes have longer closing cycles and less communication. And, the listing agents don't want to see that. The listing agents want to see someone they're familiar with, somebody that they can pick up the phone and call and deal with directly if there's an issue,
Usually locally, not nationally.
Absolutely. And so from my experience, they prefer local people for sure. But then also, another advantage, just to touch back on the fully underwritten approval, we're invested in the client. We've spent hours and time, and the client's invested in you. They've already got everything through, meaning you as an agent and you as a loan officer. So to me, I think they're fantastic. Most of the time if we get a client fully underwritten, ready to close in 10 days, like, that client's pretty loyal.
Yeah. 100%.
Because we've already done all the work.
Yeah.
And our pricing is fair, and it's good, and it's aggressive. And, and you have a really good rate, and it's a good product, and you're fully underwritten. There's no surprises. So I think, certain agents will request that right away. And sometimes they won't be through the fully underwritten and they're already under contract. And
Right.
It just gives us a head start.
Absolutely.
I think it gives confidence to the client. I think it gives confidence to the agent and the listing agent. There's no reason not to do it.
Yeah. And honestly, I think when it comes to self-employment, like, everything that gets calculated into that income isn't as easy as maybe a borrower thinks it is.
Especially if they got,
assets,
appreciating. Appreciating assets, or they have 70 schedules. Like, there's a lot of crazy self-employed borrowers. Like, we've done loans where, we know people's net worth is significant and they show a loss on their tax returns because they're able to based on our current tax laws. But, they're,
just having the knowledge then where to place them and how to calculate
absolutely, yeah. And it's tricky, So, talking about people that are worth millions but can't qualify for a $500,000 loan.
Yeah.
The normal way, right? So you got to be creative. So, and there's different avenues to help clients like that, but they're a little more creative, and sometimes it takes a little bit longer time and confidence, and and those are the things that you can tackle and get out of the way in the pre-qualification timeline. It just makes the contract that much easier.
That's awesome. Yeah, that's great advice. Now, let me ask you this too, Marshall. When working with Fairway with your group, I know one of the things that our agents have experienced and are continuing to, give great compliments about and praise is the response time, being able to get a hold of you or your guys at any time of night or on the weekends, but also you being able to have a little bit more involvement with underwriting. I know some lenders, you have the processor and underwriting's like this different room at this different location that you can't even have contact with. Sure. And one thing that we've noticed in working with you is that you have a little bit more, I don't want to say pull, but you have better relationships with your underwriters. You can tell them some common sense underwriting things to get deals through.
Yeah, absolutely. And it's also to create a path, right? So, again, like we said in the beginning, like, we see new stuff every day, right? So, typically we peel away the layers, and we can figure out, like, usually people are qualified and they're paying their bills and they're able to make it happen. It's just that we have a story to tell.
Right.
Like, what is that story? Our underwriters work with us directly, and we have a direct team that's assigned just to us. So, good relationship, direct access. If we have to elevate something and expedite something, we have the ability to do that. because they're in house. Like everything's in house.
And talk. Not to cut you off, but talk to a little bit about that because I don't think people understand the importance of significance. You work with lenders where you really didn't have these types of relationships. You work with it now. What are some of the roadblocks that if you don't have these relationships working with in-house underwriters that you can come into with other banks or other lenders?
Yeah. So, again, I've been in the industry a long time, so I've been on all different sides, So for us, sometimes it's out of your control. Like there's certain brokered loans that we have to do that it's a very specific loan. And honestly, we have less control over those types of loans, just because their guidelines are different than what your typical Fannie Mae, Freddie Mac guidelines are, right? And so the difference is we have direct access to these, whereas the other ones have turn times, right? So they're like, our turn times are 72 hours, and there's nothing I can do. If they wait till the 72nd hour, it is what it is. I got no pull. Whereas we have a situation that comes up and we have to close within 24 hours. Like I can say, hey, let's move this to the front of the line because we have a tight timeline here and we need to meet our customers' needs, right? So we have the ability to do that, and it makes a difference. Like it's all about control and communication and and telling the story. And I can say to the underwriter directly, hey, listen, I know you're seeing this, but here's the explanation. Here's a letter from the client explaining what happened. And she's like, yeah, that makes sense. And then we can move past that issue or that roadblock that, maybe we never get, sometimes when we broker loans, we don't get to talk to the underwriter ever.
To give that explanation.
Zero access, right? And so they may make a decision on something and they don't have the full story, but they don't need it. It's black or white to them.
Yeah,
and,
right.
So in this industry, it doesn't, it's not always the case. There are ways around certain times. Sometimes you can't get around things,
right?
But sometimes we can.
Yeah, if it makes sense.
Absolutely, yeah. So that's the way I can explain that. Yeah.
So, what are some things that obviously with the turn of the market, we talked about always kind of pivoting and moving. Making sure you dig deep, you got to make changes as you need to pivot and move. What are some of the things that you and your organization are doing right now? What would you say is the one thing, if you were to give advice, that you and your organization are doing right now to kind of get ready for this move and ensure that you're going to have success like you have in years past? Be part of that 60%, as you called it.
Yeah, that's a great question. So I think the focal point of this is meeting our clients, our partners' needs and meeting the people's needs, right?
Yeah.
So, and with that being said, what I mean by that is earlier we talked about it, but right now, a lot of buyers who were on the fence that were first-time buyers, they couldn't compete with gap money and paying over the ask amount and a ton of extra, cash, right? The HUD director in the state of Florida has stepped up and really beefed up first-time buyer programs, right? They're trying, they've done their part. They really have. Some of the grants and the buyer programs, first-time buyer programs, are the best they've ever been, right? It's important to us as a company is we've made a statement to make sure we have access to all these, right? And it's meeting the client's needs. It's what they need right now. They need grants, right? They need first-time buyer programs to, make home ownership a reality. And so the state of Florida's done it. The federal government's done it as well. And so for us as a company, we've really made a statement to have access to all these programs and really add them, even though, for a lot of companies haven't added them just because there's a lot of paperwork and a lot of, extra costs that come in and the margins are lower on those types of loans. They just are. And so our company has really made a statement to add these products and to make sure they're available to, our clients and to our partners' clients. And, I think that's what separates us. Number one, we're aggressive on pricing and very competitive, on rates and pricing, but also to make sure that we have access to these, all these programs. Yeah. And not only that, but access to the renovation loan products to, whatever the market changes and we have to change with it. So we can't fit everybody in that same bubble, 20% down conventional loan.
Yeah.
Like that's not for everybody.
Right.
So we got to have access to everything else, VA renovation loans, like things like that a lot of companies just, may not spend the time to invest in and to make sure that those products are available.
Yeah, absolutely. So, one of the closing questions we like to ask, we touched a little bit about it briefly in the beginning, but if you were to we always like to leave with one tip. If you have somebody in today's market ready to enter the mortgage industry, that just got licensed, they're shopping around what companies to go to, and they're ready to get to work. Yeah. What's the one main thing you tell them to consider in this market and be prepared for?
Okay, so somebody's new to the industry. It's important. This is kind of two things that I would say.
All right, we'll go with two things.
We're going to go with two things here because I feel like they're equally important. So, number one, they got to align themselves with a company that has a system, right? It's next to impossible to be new in this industry and to go out and just pound the pavement and just work on your circle of influence. Right?
It's not like you back in 2001 with a pen and a legal pad.
It's just really, it's not impossible, but it's next to impossible to make that work. I can say this, I was in default services a little bit, so different part of the industry. But then, when I came back, full time in 18, I expected my circle of influence to be a big percentage of my business because I'm in Tampa. I'm involved with a lot of different organizations in Tampa,
a lot of charities.
But I'd say my circle of influence is less than 3% of my current volume of business that I produce.
Yeah,
and I'd say 97% are people that I've been able to develop relationships with in the last 5 years.
That's awesome.
That's important to know for people that are new, right? And the reason is because I felt like I was working within a system, right? So number one, what is their system? Like, is it proven? How are you going to get your business, right? You got to have a way to get that business. If not, it's not impossible, but it's next to impossible just to beat the concrete and to be out on the street and working your own angles. So that's number one. Number two, no substitute for grinding.
Right. Work ethic.
That's it. I mean, you got to put the time in, right? You have to have daily disciplines. You have to make, if your goal is 150 calls a day, you got to make 150 calls a day, right? And there's no substitute for that. So got to grind. Look at the people who are the best at this, and they grind. Right? And they're in the trenches. And so those two things, that's what I think leads to success in our business, and I think they're parallel.
I couldn't agree more. Especially the work ethic. I always say, telling people kind of coming in what tends to separate the successful from the unsuccessful is all the little things compound into these massive results. Successful people are just typically willing to do the things and keep the daily disciplines that the unsuccessful don't.
Yeah.
And it seems so simplistic and easy, but it's difficult to be that disciplined. But you see the ones within their daily disciplines that working in a system that works is where they have these massive results. It's not like this one big thing or one big relationship they got. So I couldn't agree more with that.
Yeah, so that one big relationship, that happens all the time, but that's like a unicorn, right?
Yeah.
I mean, that doesn't happen very often, and if you're banking on something like that,
it
also could be taken away like that too, right?
Absolutely.
Yeah, so, I mean, people can hit it big on things like that, but that's not typical.
No, it's easier to go with kind of, a well-balanced business and just get it from all angles rather than what I call go whale hunting, which,
absolutely.
It's rare to see a whale, so. Well, Marshall, so for any of the audience out there, whether it's a borrower looking to get pre-approved or maybe somebody who's about to get in the mortgage industry and is looking for a shop that they can kind of get partnered with if they're, have the work ethic and want to get affiliated with, Fairway, a company such as yours with great systems, what's the best way to reach you?
Cell phone.
Okay.
For our business, that's it, right? It's on our hip, pretty much 24 hours a day, and my phone number is 813-857-5344.
Perfect, man. We'll go ahead and get that added to all the social sites, and we'll post that up. We greatly appreciate you being a guest on the show, and thank you for tuning in to the Real Estate Playbook.